Good morning, traders. This is Michael coming to you from Game Edge on Tuesday, October 21st with our pre-market prep session. As always, here at Game Edge, we'll cover our three pillars: sentiment, structure, and trend. Thanks for joining us this morning. You can follow us on X as well as YouTube, and like and subscribe, be notified when we go live with our content. As always, we try to do our pre-market prep every morning at 9 a.m. Schedulings allow for our team members. And then we do an intraday midday recap if we're available. Yesterday looks like we had a decent long recap, so make sure you check that out. And as always, we try to do a post-market recap, again, as our schedule allows, to go over how our tools were used to navigate the SPX option structure, as well as individual equities for the day. All right, let's go ahead and jump right into it. We always start with our market trend model. That helps us keep us on the right side of the trend and know the overall market. This is based on our tick tick index. Quick orientation, the bolded white line is our instantaneous or intraday cumulative tick, or what we refer to as CT. And these other moving averages we are placed on there for momentum or trend. Again, we refer to these as our railroad tracks. As always, we like to have the bolded white CT above the railroad tracks and moving from lower left to upper right. And then our last area that we like to watch is the colored ribbon. Again, the red below the cyan is indicating some longer term selling in the overall market. But as the bolded white line, the cumulative tick or instantaneous cumulative tick crosses above these colored ribbons, it starts pulling these moving averages back to the upside, putting in a positive slope. This is the tick US. We'll look at the tick RC here in a minute. That's how we base our mechanical portfolios, our P-trans to PX, as well as the wheel strategy portfolios and whether we're entering. Yesterday, we referred to this as a linear up day, obviously a significant slope, 45-degree angle to the side. That's indicating a large amount of buying versus selling in the overall market. Up here is a breadth indicator, new highs versus new lows. We like to see the new highs obviously outpacing new lows, indicating more stocks are being bought than sold. Our filtered cumulative tick, plus 1,000, minus 1,000. This is larger block orders or larger market participants, including institutions transacting those large orders. Again, we like to see this above zero and rising fairly rapidly, indicating larger institutions are stepping into the overall market, and there's more buying versus selling. And this is our cumulative tick, obviously rising to the 212,000 level yesterday, indicated pretty significant, strong buying to the upside. All right, let's move on to the tick RC. Again, this is how we base our mechanical portfolios and whether the triggers are on or off. And if we're above these, above the colored ribbon with the bolded white CT, that gives us an overall positive slope of the colored ribbon. So that turns our mechanical portfolios on. Again, linear update yesterday. So we want to see this continue back to the upside. The main thing is we also want to see the tick making new highs with the SPX making new highs. So yesterday, significant buying. We'll see if this is maintained. Usually we have multiple days of buying to the upside, or we'll see one day of buying, some sort of consolidation, and then continue to the upside. So we'll watch this day over day. All right, let's move on to the SPX option structure. Again, this is largest, most notional value of the option structures that we look at. We like to separate it as the SPXA and the SPXP. As of now, we believe we're the only service that does that. And why do we do that? We answer that question as the SPXA is larger institutional positioning. We call those our cruise ships or tankers. Those are what are steering the overall direction of the market for a longer term period. You'll notice these are monthly expiries. So again, these do not include your 0DT as well, or they do not show your 0DT as well as your weekly expiry. So we like to look for these to see our 40,000 foot view. Institutions are positioning, they're call dominated still, above and below spot price. So significant amount of out of the money call speculation within the overall complex, as well as below spot price. So again, any pullback should maintain and be supportive. You can scroll back and look at our previous videos from last week, how we saw this overall structure start to degrade a little bit via out of the money put speculation. So some of these net green net deltas to the downside were actually red, indicating that some speculation to the downside was happening, and we got an overall pullback in the market. Another key area we like to look at is the transitions. Again, above these transition areas, keep us in a more call-dominated positive gamma structure and environment. Again, that leads to possibility of price appreciation. We see 6,800s, that next gradient to the upside. So we'll be watching that level intently. So again, staying above the transition areas gives us an overall positive look for speculation to the upside. Within the transition areas, it can be choppy, but we're call dominated below spot price, call dominated here. So again, pullback should be supportive to the downside. All right, let's move on to the SPXP. These are what we call our speedboats. Obviously, 0DT expiries here, as well as weekly, depending on if you're using our web app. You can turn each of these tiles on and off, or have a aggregate of multiple tiles to see if the structure is advancing or declining within the overall complex. So we're call dominated above and below spot price, significant amount of net gex here. Okay, should be back. Sorry about that. Yep. Sorry about that. Lost our internet connection and went down. So we should be back. Okay, great. So again, GEX ratio, short dated call gamma versus short dated put gamma. We like to see this rising to the upside, indicating call speculation is heading into the overall complex. All right, moving on to SPXP delta balance. Again, we separate this from the right-hand plane and the left-hand plane, as well as the aggregate, which is the blue line, which is our delta balance. Right-hand plane is above spot price. This is your out-of-the-money call speculation or your in-the-money puts. And the red line is our left-hand plane. That's your in-the-money calls below spot price or your out-of-the-money put hedging. Again, we like to see both of these above zero, indicating that these are call nominated and the bulls are in control. So we saw that significant move to the downside last week. And then we've seen the repair and move back to the upside. And this would also match our web app, calling those call dominated above and below spot price. So again, you see this in just a different type of visualization as we separate those. So we want to continue to see this maintained above zero, and out of the money call speculation, which is the green dotted line, your right-hand plane, continue to rise, or at least the aggregate of the delta balance, which is the right and left-hand plane, staying at the +1 level, as well as staying above zero. Now, we do see the left-hand plane drop slightly towards the end of the month, towards the 27th. So again, we'll watch this to see if this changes any, but these are projected on out in time. So as of this time and where spot price is, we continue to maintain this as a bullish overall structure. With the possibility of price appreciation out in time for further expiries toward the end of the month. So again, we'll watch the monthly expiry as well as the end of the month to see if the speculators are maintaining the overall out of the money call speculation. All right, moving on to the SPXP net stat command. So this is our high sensitivity levels for today. Again, 67.50 to the upside. Out of the money calls, you see left-hand plane integral in the money calls below us at 66.50. So again, this delta line here is conducive of price appreciation to the upside, supportive on a pullback, as well as out of the money call speculation. Again, we like to see these integrals a little bit higher, but again, supportive on pullbacks as well as speculation to the upside. Net charm, you see those sensitivity levels. Out of the money calls almost double what the out of the money puts are, or at least 1.5, 1.7 to 1 via the integrals. So again, if we're below 6,800, this will be a headwind as this out of the money calls continue to charm their way and grow overhead, maybe difficult to overcome 6,800. So that's why we talked about that peak X and COI at 6,800. Again, a level that may be difficult to overcome. And you see the gamma levels, highest sensitivity. Obviously, if we move above 6,800, we may have an opportunity to move rapidly higher. And then to the downside, we see the Vanna if we see volatility continue to drop. All right, let's move on to the SPXP 0DTE structure for today, again, via our web app. So again, drunken sailor range here. Transition areas overlapped. If we're in the transition area at the open, that is neutral. Again, above transition is bullish. Below transition is cautionary, not necessarily bearish, but a little bit more weak stance. With the call dominated structure to the downside. So again, below drunken sailor range, we'd look for an opportunity for a move to the downside. Above drunken sailor range, we'd look for an opportunity to move up towards the 6790 to 6800 level. Those would be the first gradients we'd watch. Obviously, 6750 is going to be important. So as of now, at the time of looking at this, we're within the overall transition areas via spot price. So again, it could be some choppiness price action today via the drunken sailor range as well as the transition areas. So if we pull back to the bottom of transition as well as drunken sailor range, maybe an opportunity to get long for a move back towards the top of DS. And then if we merge out of the top of DS and transition, we could move back to the upside. Again, after a large move yesterday, most likely we'll see some consolidation with spot price and digest those gains. So again, just choppiness within the overall transition area may be the MO for today. All right, let's move on to a trading view chart. I've overlaid our full expiry scripts as well as manually overlaid our 0DTE. So you see the drunken sailor range as well as the 0DTE transition. Again, as I discussed, any pullback to the bottom of transition and drunken sailor range should be supportive via all expiry script as well as the 0DTE script. And then you see we've already tested the top of drunken sailor range this morning multiple times. And if we emerge above the drunken sailor range and start pushing above this 6740 to 6750, then we have the opportunity for price appreciation up towards 6760, 70, and then ultimately plus GEX up towards 6800. We'd have to see a large amount of out of the money call speculation via our intraday vol M command as well as our vol D command for us to see that large appreciation to the upside. Most likely thesis for today would be choppiness price action within the overall transition areas and digest that large move from yesterday. So that's kind of my thesis A for today. Thesis B would be moving above the drunken sailor range, which is a large amount of out of the money speculation up towards 6760, 6770. And then thesis C, which I think is most likely, less likely, would be the emerging below the drunken sailor range and COTMP and moving back down towards 6680. So that's kind of my least likely thesis, but it's still on the board. So choppiness or moving above drunken sailor range would be thesis A and B for today. So thanks everybody for joining us. If you want to go over individual equities, I'd be happy to cover those. Again, as always, join us at GameEdge.us. Like and subscribe on YouTube and X. Go to the newsletter section here, Beyond the Bell newsletter. You'll be you can put your email in. You'll be delivered that on the weekend. And then, as always, go to our free courses, Game Edge Fast Pass. This is our flagship options course, as well as 2 other free education courses. Goes over our methodology and tools. And then, as always, join us on the pricing tab in our Discord. Extensive trading community, all the tools turned on, 14-day free trial. You'll be able to view our mechanical portfolios and then jump in the Discord where our team is and utilizing the tools every day to navigate the SPX option structure. So let me know if anybody wants to cover any individual equities this morning. I'd be happy to go over those. If not, we can wrap it up and I can jump in the Discord and get ready for helping our members for today. All right. SLV, call dominated above and below spot price. We're below the transition area. So again, pullback should be supportive, but below transitions, a little bit more weak in state. Like to see it move above transition area. PGEX up at 50 and COI at 50, so that would be the upside speculation area. For this expiry, we're actually put dominated. The next expiry, put dominated. So for the rest of the week, we look to be put dominated into the 27th. So price appreciation on SLV may not be the play for the rest of this week. Let's look at run. The solar name. So call dominated above and below spot price. COTMP is here. COTMC is here. This overall option structure is a little spotty. I would assume individual. Yeah, only 33. So this does pass our 100,000 OI filter, but 33,000 for the next expiry is fairly low. So again, not necessarily under significant dealer control. But you can see it is call dominated, so speculation is there. Just hard to tell which strikes are the most important. You can see PGEX and COI under spot price, so price appreciation probably not most likely for this week. NVIDIA, okay. Call dominated above and below spot price, PGEX 190, COI 200. Everything looks good on NVIDIA. We are just barely in the top of transition, so you'd like to see that emerge out of the top of transition, move to the upside. Call dominated for this expiry, 187.50 and 195. Next expiry, structure continues to advance, 190 and PGEX and COI. So NVIDIA looks good. So SoFi, let's take a look at SoFi. Oh, AMD, I'll get to AMD. SoFi. Call dominated above and below spot price, above transition area. So speculation to the upside, 30 PGEX and COI. So that would be where I'd be looking for that upside speculation. PGEX COI is 30. Structure does not advance much after these next two expiries. So 30 looks like your price target to the upside there, as well as COTMC. All right, AMD. Call dominated, just barely within the transition. So you'd like to see that emerge out of the transition area. 250 is PGEX. Let's see what this expiry is. PGEX COI 250. Next expiry, PGEX COI 250. So structure doesn't advance that much. So it looks like 250. And then after the end of the month, we actually see COI jump to 300. So possibility of upside movement. 250 looks like it's probably going to be your target for price for the rest of this week. So. All right. Thanks, everybody, for joining us. Again, like and subscribe on X and YouTube. You'll be notified when we go live. And as always, review our content and share it and make it a great day. We'll see you later. Thanks, everybody.